Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, December the 2nd, 2016, and this is the Daily Report for Gold and Silver, our weekend review, in which we combine it with trending markets to get an overall sense or feel for scope of activity that occurred this week in the financial markets, as well as our forecast for next week. And we have certainly seen a lot of activity over the last couple of weeks. Dow continuing to rally, U.S. equities continuing to gain strength. Kind of a counter day today, but we'll talk about that in a second. Precious metals continue to be under pressure, although we do have a nice bounce today. This is really a counter day to what we've seen as an overall trend. First, let's take a look at some net changes in the market. Gold trading up about $8.40. This is based on our continuous COMEX futures contract, 1177.90, putting it up about 0.75%. When we look at silver, silver had a dynamic day, moving up roughly 1.5% to close at 1675. Up about 25 cents on the day. Now, inasmuch as gold is effectively trading moderately higher today, up about a little bit over $8 at 1177. When we look at the action of the week, we did close lower on the week, although slightly lower. Considering that gold opened roughly at 1184 this week, it closed at 77, so just a few dollars off of the open. The one notable factor, though, is the low of this week, which comes in well below 1169, which is a 61% retracement. And of course, it's a retracement of the yearly low to the yearly high, and then the calculation Fibonacci retracement taking us to 61%. Now, inasmuch as this is a very logical place to look for some sort of a bounce in the market and recovery of the recent decline in gold prices, on a technical basis, we have to also accept the fact that this week is characterized with a lower high and a lower low than the previous week. In terms of the close, it's pretty much an equal close. And so although we could find some stability and price support at this 61% retracement, and the fact that we got a little bounce today at 1175, an $8 increase in price, we absolutely need to see more technical evidence that a bottom is at hand, and most importantly, see a pivot off of these bottoms with the market beginning to trade to higher highs than the previous week. So traders, while I believe that it is quite possible for us to see a market bounce off of these lows next week, when we look at this daily chart, we can absolutely see that, first of all of the closing prices this week were above 1169. So in terms of a closing basis, we did not breach the 61% retracement. At the same time, we have not seen any kind of an effective bounce. We had that pseudo bounce which came in Sunday of last week. And then from there, we simply had lower declining prices. We've got a bounce again today, not quite what we saw on Sunday of last week. But the fact of the matter is that the fundamentals driving this market have not shifted or changed. And as long as market sentiment remains in a risk-on environment, safe haven plays such as gold could in fact remain under pressure next week. We're looking at a weekly chart, continuous futures contracts in silver. Silver closing up about 1.5% today, 25-cent gain. We also have seen silver closing up effectively on the week. We have noted over the last at least couple of weeks that we have a disconnect between gold pricing and silver pricing. In terms of the rationale behind it, one plausible explanation is silver absolutely has an industrial component to it that is much more widely used than gold. Gold has industrial applications, but not to the degree that we see utilization in silver because of cost differentials. That being said, we have seen silver spike up on days where gold was trading lower. Today, we've got silver absolutely outperforming gold in terms of percentage gains on the day. And the other interesting factor is that when we look at the 61% retracement in silver, which is from their yearly low to silver's yearly high, 61 takes us roughly to about 1650. We have maintained a price point above this. So we do have an area of price support. We really need to see how that unfolds at the beginning of next week to better ascertain whether or not we are going to see a continuation of this bounce in silver and whether or not gold, which has tentatively found support at a 61% retracement, whether or not that price level will hold. Now, in terms of U.S. equities, we did have a mixed bag today, and we also had a little bit of softening in the market. Dow Jones Industrial has been moving to new record high after new record high. Yesterday, again, was a new record high. Today, we're closing off by about 0.1% at 19,170. So when we look at the activity of the Dow Jones Industrial Average for this last week, as illustrated with this weekly candlestick chart, we can see that it did close at a new record high on a weekly basis, a weekly close slightly above the prior week, not by much, but the range is extremely diminished and is much closer to what we saw, of course, 2 weeks ago when we had a real market consolidation, and that following this dynamic week of rallies that came just preceding the presidential election earlier this month. Now, whether or not this current candle, which is really in a star formation, is indicating potential top or headwinds ahead, or simply consolidating as we saw 2 weeks ago with this doji candle, is something that we'll determine next week. As I've said throughout the week, as we go into new record highs, the market technician doesn't have a whole lot of data to actually go and run studies to see how the market reacted at that particular price. Simply put, we are in new territory. However, it is my assumption that with all things being equal and with current market sentiment and the extreme optimism which is in the market, we could see a further continuation next week of the advance of U.S. equities. Of course, some of the big news this week was an OPEC accord which was reached, curtailing production, daily production now at 32.5 million barrels per day. That sent crude oil pricing up about 13% between Wednesday and Thursday. Today, up another percent, so we're up plus 13% on the week, now well above 50 at 51.55. So for the first time in about 8 years, OPEC member nations have come to an agreement, a production quota or cut, so to speak, the net result being a tremendous price swing in which we saw this market move from about $45 to above $51 all during this single week. I still believe, however, that even with that in play, that it is still highly likely that we will see oil prices maintain in this tight channel. As you can see, there's absolutely now an upward bias in the market, but we have effectively been trading between $52 a barrel, these most recent highs that came in October, and the lows at around $42 that really have been a benchmark for support at least since about the first or second week of August. We'd have to see how it reacts, but my sense is we'll probably trade and track a little bit higher, maybe as high as 53, but I believe that it will then see prices decline, moving back within the channel. And finally, the dollar index, which had shown so much strength since the election of President-elect Trump, we have seen some underlying weakness, softness, and headwinds in the U.S. dollar index, today closing off by about 0.33% at 169. So traders, it's quite evident when we look at a weekly chart, this being a weekly chart of the dollar index, it's clear to see that the decline in the U.S. dollar index this week is really the first major decline we have seen in over a month. The marketplace itself really began effectively tracking higher back in October and then traded to a high of about 98 before coming back down to about 96. And since the election of President-elect Trump, which occurred, of course, on November the 8th, which signals this particular lows on these candles, we have seen the dollar index literally ramp up to new values that we have not seen since 2003. Now, for the first time, we do see some real weakness that occurred this week in the dollar, but I'm still pegging support at roughly 100. And unless we break below that and back into this channel, the breakout which occurred roughly 2-3 weeks ago would still be in play. All things being equal, I believe that although we could see a little bit more dollar weakness, unless we break into this channel line next week, we will probably return to higher pricing in the dollar index. So traders, we are now 24 days into a new America. November the 8th, citizens cast their ballot and in an incredibly divided nation elected a businessman, an untested bureaucrat, so to speak, to run the largest free country on earth. And to that end, policy rhetoric that he made, campaign promises, I should say, have created an extreme amount of optimism as to the future of the economy here in the United States, as well as globally. Key things that people have been considering is deregulation, letting businesses streamline, cutting taxes, and fiscal stimulus. Also, campaign promises he made have really spoke to the fact that the political fabric in this country has been a pay-for-play type of scenario in which special interest groups and lobbyists have had the ability to shape policies in the year ahead to their benefit, and for the majority of these moves to the detriment of the overall well-being of the citizens of the United States. To that end, we have seen this tremendous rally in equities. We have seen the dollar gain strength. We have seen gold come under pressure. The fact of the matter is we do not know how this new president will be able to reside in that office and whether or not he will be an effective president or whether or not some of his shortcomings get in the way. Is he going to be able to temper his ego? Will the presidency itself help temper and make Trump into a more polished leader? Of course, there are no clear-cut answers to those questions, but until January 20th and the point at time in which he begins to effectively lead our country, we could see this optimism continue. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.